Hello everyone, it's John again. As you guys know, I did upload my first episode for the algorithmic framework, and this is actually going to be a trade breakdown that I took today on July 24th, 2026. So I actually took a short, I took it around the 11:50 to the 12:15 macro. The reversal was caused there, and I entered a little bit after the macro, but that's okay because the macro caused the reversal, so it's not a problem. But yeah, so as you guys are seeing right now on my screen, we are on the 1 hour chart prior to 9 o'clock. So these were the levels that you would have wanted to mark out. You could even mark out this high specifically, but however, if we do take out this high, I'm looking for it to at least hit the gap. All right, that's the way it has to be, and then I want to see the body close back below. But I personally did not use the time, but that's something that I there's things that I do, and I don't mark it, but I am monitoring it. But it's something that's not like, if I mark it, it's because it's actually like catching my eye. It's something I really want to see, right? So in this case, I really was looking for 9:30 to actually try to head to one of these gaps specifically, so we can hit this low. But what happened is 9 o'clock just straight dump, took out the low, and then 10 o'clock did a retracement. And what happened now? Okay, now it's a very interesting time. Now, I told you guys to mark the gaps at 9, but moving forward as well, we can delete the sell side. Price made a brand new 1 hour gap. All right, perfect. So this gap, we can actually use it. If the signature is there to cause a reversal, we can use this gap to go lower. However, this gap is about 120 point gap, about 120 points. It's pretty big. It's not as precise as what I'm looking for. I'm looking for like something that just clicks and goes. So, price could spend a little bit of time in this gap, and that's okay. So I'm gonna go ahead and print the next candle here. You guys can see here, okay, so the 11 o'clock candle prints. Now, anything about this candle, there's nothing that will scare me from shorts in this trade. Basically, why? Because price hasn't closed through the gap. It hasn't even fully filled the gap yet. If price is looking to do that, the way that it's pushing, it looks like it wants to fully fill the gap. So what I was looking at as well is I used what I taught you guys for the first episode, but I used it on the 15-minute. Some of you that are advanced, you guys can go ahead and do this. I've even gone as far as doing this at the 5-minute, but I tell you guys the 1 hour because it's the most simplest way to learn it, and it actually is a lot of less noise, in my opinion. But what you guys can see here is there actually is a 15-minute gap right here. I'm gonna go ahead and mark that out as a 15-minute SIBI, and notice as well there is a high engineered inside of it. And if we actually zoom into it, you can see here this gap is not fully filled either way. So if price can go ahead and enter this gap, take out this high, and close back below it, that is a sign that a reversal is more than likely going to occur. Okay? And that is the exact signature that I was looking for when I had this all marked up. I was even interested in this breakaway gap as well. Seeing how if price wanted to, it could have taken this high, hit this gap, and still close below it. That is still a reversal signature to me. And as long as my entry model is there on the lower time frame, I'd be willing to take a trade with that. But yeah, basically what happened here is we have the next candle go into it, and perfect. You see how it perfectly respected it. It took out that high, never hit the breakaway gap, so that's fine. We'll go ahead and delete it because it's not being used. And price body close below the liquidity and below the gap, super clean. If you actually go down to the 1 minute, that's when you guys should go to the 1 minute as soon as price took out that liquidity and start waiting for the signature. In this case, the entry model that you guys are going to learn from me, there's actually going to be a few of them. The one I'm going to go over today is the one that I took. It's going to basically be the last gap that was used prior to taking out liquidity. So in this case, what you're looking at here is I have gone ahead and marked out this gap. Now this gap actually took out, caused price to take out this same time frame high. So if you guys are actually looking here, this is a swing high right here, this 1205 1 minute candle, and we also took out this high as well, continuing higher. Now that second push here was not caused by this gap, but This was the last gap we retraced into before hitting POI, before taking out liquidity, and everything is there. So in my mind, once we break this gap, that is a sign that the algorithm is switching programs. All right. So what's another thing that could happen too is we do have these two bearish fair value gaps here that we could use as well. All right. So price goes ahead and closes below this gap completely. At that point, I was waiting to see if price can try to retrace a little bit, and then I'll take a short. In this case, price goes and retraces right here. So I actually got into the short right here in this exact time, 12:23. Now, you guys could have shorted this right after it closed right here. As long as you have the proper stop loss, there's nothing to worry about, guys. You have your stop loss at the high. You can have it above this anticipated breaker. But essentially, that is the algorithmic signature that I'm looking for to enter the shorts. We're also going to mark out the current low of day as our sell side, because that is the main objective here. And also, if we're anticipating this to be the high, you want to measure and find the nearest targets besides original consolidation, because in this case, the original consolidation is going to be this low right here at 11.19. All right, so this is actually, we're going to mark it as OC original consolidation. But I was looking for something more in the discount area, which ICT says himself. You could look for efficiencies or you look for the first swing low under the 50%. This is the first swing point, but I didn't use this. I actually used this small gap right here. I'll go ahead and extend that. Right there, that gap, that was my first target. So I'm gonna go ahead and play this out right here. And I want you guys to notice something, all right? Everything I'm showing you is fractal, all right? This gap was used, like it wasn't fully filled. It was used to get almost fully filled. Left a low in it. Price hits it. I know it displaces through it, but this can cause retracement. So price goes and retraces. Obviously, what we can see, it does retrace into 930, but more specifically, go to the 15-minute. You will see 15-minute gap right here. Now, from here, we're looking for the same signature. I'm telling you guys, this is always here. If I mark out this gap right here, this is the last gap that price used prior to pushing higher. You guys can see it there. That gap gets instantly taken, gets inverted, used right there instantly, and price just begins to fall. Take a look at this. First target, hold the runner till the sell side's met, and boom. As you guys can see, this is the whole market maker model that I caught today. And I entered exactly at 28,582. Go ahead and mark that out here. I had my stop loss right there of this 1205 high. And I targeted this low and I caught a 19.26 RR. Now, if you mark it from the high, it would just be a 6 RR, which is still valid. If you would have gotten in as soon as we inverted the gap, that is still high or win rate, right? The high or not win rate, risk to reward, all right? So I'm just showing you, even if you would have just targeted this original consolidation, you would have made money. Like there's no reason for no one that is following my model to have not caught this trade. All right, if you didn't catch this trade, I recommend that you study this trade because it has everything that I'm looking for. Besides, as far as it goes, the PO3 ranges, I haven't gone and explained these to you guys yet. And if I'm being completely honest, the PO3 range today was not in play for this trade. It was not necessary because it wasn't lined up properly, so we didn't use it. But that is something that you guys will learn in the future when and when not to use the PO3 ranges. But yeah, I hope you guys really enjoyed this breakdown a bit. There's more to come, guys. You know, the next video I'm gonna go over a few more POIs because I really want you guys to understand where reversals can form, because I can sit here and tell you guys all about entries, but it doesn't work without the POI being there. If there's no POI, there's no logic for the trade to play out, and there's no reason to look for the entry. The entry is literally, it's patternized in a way that I gave it to you guys. You know, there's also the breaker, but I'm giving you like the last gap is my favorite entry model. And like, you know, we don't need to know the entry right away. We need to understand why price is doing this. And it's simply because it took out liquidity inside this gap. It also hit a 1 hour gap. If you look at throughout this whole move up, guys, is there ever once, a gap that was last used get inverted? That's what I'm gonna have you guys do right here. Is there any gap? Last used gap right here. Did price invert this gap? No. Price just keep going higher, going higher. Did price use this gap? Yes, but did it invert it? No. Did price use this gap? Did it get inverted? I know I'm marking it together. It's fine. I'm finding them. You're literally just waiting for one of these gaps that was last used to get inverted. As soon as it does, that is a sign that the algorithm is switching over to the Excel program in this case. But yeah, there was never a false entry here, guys. I'm not gonna tell you, like, you know, go to the 15-second, look for it. You know, you could look for the signature on the 15th and the 5-second. On the 1 second, it will be there, but it needs to have reasoning. The more you zoom in, the harder it is as the analyst, the trader. In my opinion, wherever you see the gap, that is the time frame that you're going to trade it, because that is the time frame that the algorithm is running on. If this last gap was not used, like, you know how sometimes on the 1 minute you have like just straight candles, you know, like just non-stop, like no retracement, but on the 15-second you have retracements. Then on the 15-second you will see this signature that I'm referring to, and that is the time frame you're going to trade. All the PD arrays on the time frame that this reversal signature is on is going to work. Yes, you heard that correctly, guys. The time frame that this reversal signature is on is going to be the one where the PD arrays will work flawlessly, guys. Why? Because the algo is running on that specific time frame. If not, it wouldn't have inverted that gap with the last gap used. If it doesn't work, if the last gap entry doesn't work, you have the wrong gap. I promise you, you did not mark it correctly. But enough of that, guys. All right, enough of my rant. I really hope you guys understand why I took this trade now. If you guys do have questions, you guys can always comment below. You guys can always, you know, go on my Discord and ask me questions. I'm way active now. So yeah, guys, I just want to help you guys out and get you guys to learn how my model works, so you guys can go ahead and make money off the financial markets. So that's literally what we're all here for. I'm not here because I'm fascinated with how candles move, and I mean, I like seeing candles do certain things, but I'm here because I'm here to make money, and that's why you're here too. So just study this stuff. I'm telling you, it will click, and when it does, you're gonna see exactly the same trades as I'm taking. But yeah, guys, take care, guys. Enjoy your weekend. Be safe, guys. I'll talk to you guys soon. New lecture, episode 2, probably next week. We'll see. Depends how busy I am, but definitely coming out either next week or maybe even throughout the week. Depends how I'm feeling, guys. You know, I want to give you guys also some time to learn this stuff, and I just don't want to start throwing like episodes back to back, drive you guys crazy. You know, too much information is actually a very bad thing. Yeah, guys, take care. Be safe.